just over the weekend, we were talking about 3 bank failures, right? You had Silvergate, then you had Silicon Valley Bank, then you had Signature Bank, and now I'm waking up. This is Monday morning, and we got more bank news. It is crazy stuff. I want to show you the headlines, share some thoughts, and get yours as well. This is what we're waking up to. First Republic dropped 60%, leads decline in bank sector despite government's backstop on of SVB. And then you get these other ones here. It's like PacWest, Zion, Wall, Key, Bank of America, FRC. They're all down, but some are way more down than others. I think it's the regional banks right now are where the fear is at. You can also see here, Rivian is revisiting its exclusivity agreement with Amazon for EV delivery trucks. The reason why I'm mentioning Rivian with the bank stocks is because essentially people are sort of like, okay, I need some money. Let's rewrite this deal. This Rivian is one example of that. There is a fear right now, right? Fear index is at 17%. Is definitely taking a dive. Also, too, you can see here, this is an interesting one. Goldman Sachs thinks the Fed may change course. This is what Goldman's saying. Goldman Sachs now sees no Fed rate hike in March. The path beyond is uncertain. So they think they're going to pause in the rate hikes. And it's funny because we were just talking about just last week, right? That inflation was a bit concerning, and the Fed is going to probably have to do the 50 basis points. Federal Chair Jerome Powell was talking in front of Congress. There was some fighting, et cetera, and we just thought everything's coming out more hawkish. Now Goldman's like, no. The Fed's going to do something different and make a U-turn. It's like, what? And this is sort of what's going on in the market right now is that, again, bank stocks are struggling and a lot of uncertainty. I mean, they even say here, path beyond is uncertain. We also have SVB's rescue means the Fed won't hike rates in March. That's according to Goldman. It's crazy headlines. SVB backstop revives the specter of moral hazard. This is an opinion piece, and the basic gist of it is we're arguing, was this a bank bailout or not? Honestly, it depends who you ask. I think it is a bailout, but again, it depends who you ask, and I've been reading different things as this is going forward. More headlines. Regulators face questions over missed warning signs at SVB. And this is the other one I want to talk about with you guys as well, is what is going on with Bitcoin. It is interesting because, one of the reasons why you can make the case for crypto is that, hey, Chris, we don't trust the banking sector. We don't trust that fiat currency is any good, et cetera, because they can just print whenever out of thin air. We believe in Bitcoin, and evidently markets are saying Bitcoin isn't that bad. I'm just telling you guys the truth. Now, I'm not into this stuff, but I'm just saying Bitcoin is not collapsing, which is actually quite interesting. Markets are really, really volatile now. I've been watching it. They opened up red, then they went back green, and then I think the red right now is this recording. But we'll see how they finish out the day. I'll come back. The things I'll be tracking, if you're all watching this stuff, you want to be looking at what are your treasury yields doing? What is the VIX up to? And my personal opinion is that things are really, really volatile. And if you don't have the stomach for it, just manage your risk. And essentially when I mean by that, when I say these kind of things, is you just put money in different things. Even just holding cash is fine when you got savings accounts that pay 4%. You got bonds that, in the 4% range. I think some maybe jumping to 5%. We'll see what they end up doing. Or if you do want to put in the market rate, I wouldn't be YOLOing anything right now because things are just really, really wild. And that's why I said, depends what you have a stomach for. What's kind of what was going on, it felt like that we had the rally in the markets the last couple of months, and it felt like it was peaking out a bit, and that the Fed was most likely going to raise rates to calm things down. And right now, even Goldman's like, well, maybe Fed's not going to do that. And so this is sort of where it's really uncertain. And I'm taking Goldman with a grain of salt because one of the things that is going on is that when the fear is, hitting the banking sector, their goal is to just keep people's money, right? Their goal is that they want to manage your money so they make their fees. And so you're reading all kinds of different things on Wall Street. And one of the things that I will share with you, and I've told you guys before, is when it comes to these kind of things, we're talking about this big, big money. It's hard to trust anyone. This is real. I lived through the dot-com bubble. I lived through the 08-09 crisis. And people, frankly, will lie to you for money. They'll go on TV and say, oh, everything's great. Everything's fine. And then the next day, these stocks will collapse. And so literally people will lie to money because they're trying to essentially cover their butts. I personally am, concerned about the markets and concerned about the way things behave, because this is not a healthy thing that, 3 banks are essentially failing. And then you wake up and you have bank stocks down 50, 60% on some of these regional ones. Whether or not your money is safe, because people write in the comments, hey, what do I do with my money? Okay. So the FDIC insures up to 250K. So for the average retail person, I would say just average person, you're probably okay, and you'd want to essentially spread out your money so that, have under 250K in different bank accounts. So if you're going over that, you probably need more than one bank account. The other thing is someone wrote in the comments, I'm just addressing, and said, hey, Chris, you're so dumb, not everyone has that much money in, say, banks. And like, here's the thing. Some of these banks, like Silicon Valley Bank, for example, it was around 97% of the deposits were above the 250K, meaning that much of this money was uninsured. So this is why it was very, very concerning for many people. And that's why I opened up, last video saying, hey, it looks like you're going to get your money back. So that's in terms of Silicon Valley Bank. That's what the government had said. But now that we're waking up and there's like more regional banks that are struggling, I don't know. I mean, how much money is there to go around? And there's two different things that are going on. So one is, let's say a bank fails, like, for example, let's talk about First Republic. If you have equity in the thing, right, you have stock and things of this nature, there's a chance you get wiped out. Now, whether or not the people who just say the positive people put money in this thing, whether or not they get wiped out, as long as you're under the 250K, you're probably okay. SVB, the government say, hey, we're going to give loans to the bank. We're going to make sure the depositors are going to be, all right, made whole, etc. We'll see, but there's definitely a disconnect between the customers of the bank and then the, equity owners of the bank, because this is sort of why bank stocks are collapsing. But it's certainly a point of concern. I don't find, comfort in saying, oh, well, I have money in First Republic, the stock's down 60%. Everything's going to be okay. I wouldn't think that, especially if I was above the 250K. That's why I mentioned that. And this is sort of why, basic rule of any of these kind of things is diversify, right? Don't put all your eggs in one basket. And that's probably the biggest lesson out of anything going on right now, is don't put all your eggs in one basket. So love to hear your thoughts on this thing. The big question is, what do you think about the regional banks? And do we think fear is going to spread? And is there some sort of contagion? Usually, the thing that I would say is that the market knows something, and we're seeing what it is. Banking stocks are collapsing. So I'd love to hear your thoughts on this one. We'll cover it again after market closes, see if anything comes out, because literally the markets are just opening now, and this is sort of what's going on. So thanks for watching, and I'll catch you guys in the next video.